Happy Friday, everybody. Hey, I hope you had a great week. I know Johnny Depp did, right? So we got to get that out of the way because you knew it was coming. But, the reality is, guys, there's a lot of uncertainty in the world right now. There's a lot of questions and comments and concerns. But I want to kind of bring you guys back around, run through a little timeline here that not that all of y'all forgot, but some people have forgotten, right? I pulled up an article and I threw it out on Facebook on Thursday that if you look at the stats, there was an article printed in 2018 that was talking about how bad the market had become because interest rates had risen to 5%, almost 6%, and inventory was starting to come up in 2018. And we know what's happened since then. And then you go back to 2015 and why didn't people buy in 2015? And then you go back to 2010 and why people didn't buy real estate then or why people were selling stocks then. Listen, I heard this one time and it was really kind of relevant. It was back early in my career and it was the story of a stockbroker who had taken a list of 10,000 people. And they were going through the math and they said they took their list and they cut it in half and they said, hey, this stock is going to go up. And half of the list got a newsletter that said this stock is going to go down. And then they sent that out. And whatever happened, then they took that list. Let's say that the stock actually went up. Then they took that list of now 5,000 people and they cut it in half. And they picked another stock and they said this stock is going to go up. And the other half got a newsletter that said this stock is going to go down. And they did this 5 or 6 times, but then they had a list of 250 people that thought that this particular person was perfect in their stock picks, not realizing that they had been culled from a list and fed a narrative. They had been fed a narrative that really maybe wasn't true. This guy didn't get any stock picks right. He just said maybe and maybe, right? And that's where I feel we're at right now with everything that's coming at you. There is so much information coming at you that says the market's great, that says the market's terrible, that says the market's sideways, that says don't buy, that says do buy. Let me just tell you one thing. Fundamentals are fundamentals. There is a supply shortage. When things are in short supply, prices go up. When things come back into a regular supply, there's enough of them, prices stabilize, and when there's too much of them, prices go down. If you look at your marketplace, mine happens to be Boise, Idaho. We're moving into Houston, Texas. We're moving into North Carolina. And so I've spent a lot of time getting into these markets and understanding these markets. And when I understand the market, the first thing I want to know is what is a normal supply? And I don't mean today. I don't mean in the last 2 years. I've been doing this for 28 years. I'm second generation in what I do. So I go back to the last 30 years. I want to know what is a normal supply in this market. So when I look at a new market like Houston and I see that there's a 2% vacancy and I see that cap rates have traded down to a 5, and I look back 12, 18 months, maybe 5 years, I see that that's not normal, right? I see that a normal vacancy in the Houston market is about 6%. That's a really good number. That's a normal number for Houston, right? And when I look at the cap rates, I see that cap rates in Houston have typically traded about 1.5% to 2% higher than what has happened with the interest rate. So I can sit here and go, well, now I know what a good deal looks like in Houston. And I can underwrite that deal like I would underwrite any deal. And I can know that my fundamentals are correct. But until I do that, until I know what a large swath of historical data means, and I've seen the data. Houston's gone way up in vacancy to 12%, 13%. It's gone way down to 2%. There's been a 7, 8 month, 9 month supply of housing in Houston, up to a year and a half supply in Houston, right? During the downturn in 08 and 09. But there's also now not even a month supply, or there's been as little as a month supply in Houston, right? So when you really drill into a market, you can figure out what's going on. You can do the same thing with a stock. You could do the same thing with a crypto. You could do the same thing with a lot of things. You just have to understand the broad spectrum fundamentals. You can't just go in there and go, hey, today it's down. Yes, you're right. Bitcoin is down under 30 this morning. But a year ago, it was under 30, right? So the short-term spectrum says Bitcoin has gotten cut in half. And that's true. If you got in at 60, you're hurting, right? Now, the only time you take a loss is when you sell, right? That's when you register the difference between the price you bought at and the price you sell at. So if you're not wanting to take a loss on Bitcoin, don't sell it right now, right? If you're going to go into markets like that, make sure that you're going in there with money that you don't need right away, that an emergency situation isn't going to force you into a position where you've got to liquidate. I've done that. Sucks, right? I put myself in that position. But the reality is when you're looking at market fundamentals, you can drown out the noise with knowledge. You can drown out the noise with absolute facts. NAR is a great place to get that. The National Association of Realtors. Call a realtor in the Houston area that's been in business for 20 years, that's been in business for 10 years. You know, we've seen a lot of people jump on the real estate bandwagon again. And I love it. I love seeing people invest in real assets. But the truth and the reality is people jumping on and off a bandwagon are the ones that give it the bad name and the ones that get hurt the most. Because any real investment is a long-term hold, right? Any real investment is not a quick thing. There's an investment of time, money, and effort. And the longer window you're willing to give it, the better off it's going to be. Warren Buffett is a huge proponent of the buy and hold strategy. He buys companies, he buys stocks, he holds that position and looks like a genius because he lets time work for him. See, we're all in this thing to try and stop trading our time for money, but we've got to start realizing that equation there of time, it has to be given time to work. It has to be allowed to do what it does. And in doing that, you can see some pretty fantastic results. I use the analogy of a really good friend of mine that bought a house at the top of the market. I think it peaked like a week after he closed, right? And the guy kept the house. He kept paying the payment. He kept doing the thing. He said, I need the shelter. I might as well live here. And now the guy looks like a genius 12 years later or 14 years later. The guy looks like an absolute genius. He's paid the house off and it's worth double what he paid for it at the peak of the 2007 market. Right? One might argue that his dollar's worth half. We won't get into that one. But the reality is, guys, when you really want to drown out the noise, you need to put your own facts in front of you. And you can get and find plenty of really great facts and statistics about what you're looking for if you're willing to put in the effort. Sometimes that's a phone call. A great realtor will give you that market information, will educate you on the data, will educate you on the submarkets of the area, and allow you the information to make a good decision. But guys, we are seeing fundamentals change in the marketplace, just like they changed to get where they were, just like they changed to get to a 5,000-year low on interest rates. That was a fundamental market change. Nobody realized that nobody knew, a lot of us knew, but nobody kept saying, guys, get this while you can because this will not last. And there were people that said that too, so I apologize for that statement. There was a lot of people in the camp of, oh, yay, this is going to last forever. Those people are now going, what? Because it's changed. So guys, make sure that when you're looking at your market, you're looking at a broad swath. And I would say if you're gonna, the narrowest you should look at is go back to 2006. Look at 6, look at 9 and 10, look at 15, compare all those years and see what you're dealing with, because that market will perform very similarly over the next several years because the fundamentals of the market are there. What's job growth look like in an inflationary market? What's job growth look like in a constriction market? What are the things that are going to happen? It's very predictable. Because if you drill down into the data will give you the knowledge so that you're not playing the guessing game. You're not throwing darts at a board, and you're not taking the stock tip of a guy that divided a list in half. You've done your own research, you've got your own knowledge, and you know what's going on. And guys, that's really where you need to put yourself, is in a place where you've drowned out the noise, you put your own facts, the facts in front of you, and you've made your own decision. So I hope that helps, guys. I hope you have a great